Good day, everyone, and welcome to FPi Current Affairs, proudly brought to you by Propulsion Life. There's a lot to scoot through this morning, so I'm going to jump off immediately and talk about National Treasury and the South African Reserve Bank. They've published a draft crypto asset manual for cross-border activities for public comment on the 3rd of August. This is important because it starts giving us more clarity about how cryptos will fit into South Africa's capital flow framework. Under the proposal, a crypto transaction becomes cross-border when crypto assets move between a domestic authorized crypto asset service provider and an offshore CASP, or from a domestic authorized CASP to a non-custodial wallet, resulting in an inflow or an outflow. And here is something financial planners should take note of. At this stage, only individuals would be allowed to externalize crypto assets through authorized CASPs, using their single discretionary allowance or foreign capital allowance. Another important one, this draft manual goes even further. It proposes a single discretionary allowance of 2 million per individual per calendar year, or for qualifying cross-border crypto transfers, while the foreign capital allowance remains up to 10 million, subject obviously to your tax compliance requirements. Comments close and is due by 30 September 2026. Then a very important update from the Financial Intelligence Center. FPi did circulate this earlier this week. There is on the 3rd of August, FIC also issued a guidance note 7B. Among the technical changes, FIC has incorporated profile ration financial alongside money laundering and terrorist financing. It also has updated its guidance on assets risk associated with new technologies, systems, and controls, and clarified circumstances where simplified due diligence should not be applied. The reference to technology is relevant as financial services businesses increasingly introduce AI, as we know, automated onboarding and other digital systems. So look out for that notice. FPi did publish it on our membership community. Now back to National Treasury and the South African Revenue Services, because there are very important tax proposals open for public comment. We know this time of the year, we see the 2026 TLAP, or otherwise the Taxation Law Amendment Bill, and the Tax Administration Law Amendment Bill that came out for comments, and comments is due quite early, the 28th of August already. There's quite a few proposals, but I will hone in on one or two. First, Treasury wants to clarify the de minimis rule for multiple living annuities. Where a person has multiple living annuities with the same insurer or fund, the proposed 150,000 threshold would be considered cumulatively rather than policy by policy. The policy objective is to clearly to prevent the restructuring of several smaller policies simply to access those lump sums. Then another important one is donation between spouses. Government proposes limiting the interspousal donation tax exemption to donations made to spouses who is South African tax residents. Treasury says it has identified arrangements where spouses stagger their cessation of South African tax residents to move wealth offshore while avoiding donations tax and reducing capital gains tax. So there's quite a bit more, but for the sake of time, I'll scoot directly into updates from the Financial Sector Conduct Authority. Now, the authority published its regulatory actions report, and it's quite a big one. Go and have a look at that. And there's quite a big difference if you look at the numbers. The FSCA reports administrative penalties totaling approximately 2.8 billion against only 76 persons and entities, compared with the 119 million in the previous reporting period. So it jumped from the millions straight into the billions. The increase was driven largely by serious phase contraventions, market abuse, and anti-money laundering failures. Then finally, the Financial Services Tribunal, there was two decisions that came out that's worth mentioning. One is about a debarment in Marker versus Sanlam Developing Markets. And shortly, what this person did is the case involved 23 payments totaling more than 1.1 million, where this person described himself, this payment was for protection. In short, it's actually bribes. It's bribes that he paid, not actually to be compliance monitored and or screened. So this is quite interesting. The tribunal then emphasized something worth remembering. Debarment is not punishment. It is a protective measure designed to ensure that only fit and proper persons render financial services to the public. And then maybe a last one in Mafunisa versus the pension fund adjudicator and others. Long story short with this one, it's a member of a fund who submitted his disability claim later than the 6 months. And then the pension fund adjudicator agreed with the fund, but then the tribunal came back and said, but hold on, the trustees actually had discretion to allow this case to go through, and the trustees didn't even make use of that discretion at all. So the case was sent back to the pension fund adjudicator for further consideration. So it's a very busy regulatory week. And then from FPi, the upcoming Estates and Trust Masterclass is on the 19th of August. Please do register. We will hear from speakers such as Yanni, the CEO from FISA. And then also please register for the FPi's convention in October. There's still some open seats for in-person as well as online. And then thank you for all the wonderful ladies that attended the Women's Day event. It was quite emotional listening to ladies that has lost their husbands. We had Pink Drive there that spoke about breast cancer and breast cancer awareness. So please look out for the press release that will come out with short captures of stories of all the speakers that we had. Goodbye.